Hello there, Mavericks. This is Imri, and welcome to today's currency recap. It is Thursday, August 24th. So today, as usual, we'll be covering any meaningful news that came out of the day. We're going to be looking at the broader equity markets. We'll also take a look at some commodities. We're, of course, going to break down each of the major indices. We're going to take a look at our proprietary currency baskets, as well as any major news ahead to close out the week. And then finally, we're going to close things off by taking a look at some possible trade setups in the cryptocurrency and Forex markets. In this currency recap, we'll be using advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable currency trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep the majority of the profits generated. If you are a technical trader with a technical trading system, we want to meet you. Click the application link in the description below this video. Now let's break down today's market action. All right, so breaking down today's market action, I'm going to kick things off by taking a look at news of the day, and the major news would really just be that stocks continue their slide despite upbeat news on Nvidia, smashed earnings, reached a new all-time high, and yet the broader stock market still sold off. And in related news, the US dollar maintains its bid. So taking a look at the broader equity markets here, crypto, gold, and oil, we can see that commodities have stayed mostly flat, but crypto and equities are both down. In fiat currency land, we can see that the dollar was the biggest winner today, the yen was flat, the pound, the Aussie, and the Kiwi were the biggest losers, whereas the Canadian dollar and the euro both put in somewhat respectable showings on the day. And then finally in crypto, as I mentioned, they were down, and each of the major market cap cryptos that we're tracking here were also down on the day. The market outlook remains at a -2. If we get a couple more days of vicious selling, then we're going to get that bearish moving average cross between the 20 and 50 period moving averages, and then we're going to have a -3. On the other hand, if things stabilize and we trade through those moving averages, then we'll be in pretty positive territory quite quickly. So taking a look at this chart of the S&P 500, it's pretty simple for me. We have immediate overhead resistance in the form of the 20 and 50 period moving averages, and we have this key support level at 43.28. 43.28 is basically a trap door. If we breach that level convincingly, in other words, if we get a red daily close below that level, a red candlestick, then I think we're going to see this sell-off accelerate. However, if we can hold around that level and chop around it, or even if we do chop around it sideways for a few days, that tells me that the sell-off is likely close to being over and we can look for higher. So parameters are set out for both the bullish and bearish paths that this market might follow. In terms of news to close out the day, there is quite a bit going on tomorrow. We've got the Jackson Hole Symposium. Fed Chair Powell is speaking. That could definitely bring about some fireworks, so keep an eye out for that. It's not going to be an economic news report that necessarily gets released. It's just something that you'll have to keep an eye on throughout the trading day. But definitely potential there for US dollar volatility and also equity market volatility. All right. Going now into currency analysis. In terms of our velocity scores, I've got the dollar and the yen at a +2 and the Canadian dollar at a +1. In the negative column, we've got the pound and the Swissy exhibiting the strongest characteristics of negative velocity. And then at -1, we have, of course, the euro, the Aussie, and the New Zealand dollar. And the cryptos, despite being down on the day, are pretty flat from a velocity perspective. Okay, let's now head into TradingView and see what's going on. We're going to start off with the Japanese yen. So this is the Japanese yen basket that we're looking at. We're going to see what is going on here. Just bear with me as I'm reloading my TradingView. Okay, so the Japanese yen been in a clear downtrend, and then we kind of stabilized, bounced, and now we're going sideways. So what is going to come next? Well, if I throw on the moving averages, you can see that we're right on the daily chart, right at the 20 and 50 period moving averages. So it's pretty much do or die time for the yen. If we do close above these moving averages with a strong daily candle, then I see us heading a little bit higher, potentially to test this high from the end of July. So what's going to happen in the next couple of days with the Japanese yen is going to be very, very important. If this emerging bullish pattern kind of breaks down, however, then the trend line you should keep an eye on is this one right here, just where I'm connecting the bottom from beginning of July with August 15th and the August 21st lows respectively. All right, we could potentially get a little bit of a bounce here, some kind of triangle perhaps, so we could get some sideways action before we break down. That's also possible too. The dollar is really trying to break out and make a run for it. I mean, we've got a triple top up here. Dollar so far says, I don't care. Bears tried to take control, but they weren't able to. I'd say the next objective for bulls, as far as the US dollar is concerned, is to tag the 61.8% retracement of the entire decline that started in October 2022 and ended in Feb 2023. So if that really is the bullish target for anyone involved with the dollar here. If we fail up here, then we're going to get a confirmed triple top, and we're likely to head back to where we were on May 10th. So either way, I see nothing but volatility ahead for the dollar, which is great news for us currency traders. Don't really care about the direction the dollar is going to go. I just care that there's going to be volatility to take advantage of. The Swiss franc, so I mentioned how I'm looking to buy the Swissy on pullbacks until we have conclusive evidence of a top. I don't think we really have conclusive evidence of a top yet, although we might be getting close. We're in, like I mentioned in previous updates, in pretty uncharted territory here with the Swissy. So you can see we're kind of between these two trend lines. I like the idea that the Swissy could find support between those trend lines. And you can see here that that 20 period moving average, the green one, is smack dab in the middle between the two trend lines as well. So look out for that. Could be a little bit more Swiss franc weakness, and then I'm going to look to see whether the Swissy can establish a base. All right, so the euro ran into resistance, chopped around that resistance level for several days, also coincided with the middle line of this channel here, and then we started to sell off. I'm interested to see whether or not the euro can go a little bit further. Let's see if we can test the lower boundary line of the support channel, and then it'll be very important to see what the euro does. Is it either going to bounce from there or break down harder? Next up is the pound. I've been saying how I think this breakout in the pound is a fake out. I haven't been proven exactly right yet, but we're getting pretty close. If we break below this support line, then I would say it's game over, and it's going to be open season on the pound basically. From a fundamental perspective, the UK is in a world of trouble. They're trapped between a flagging economy and high inflationary pressures. There's nothing the Bank of England can really do here to, in my opinion, prevent a pretty catastrophic recession. I'm definitely ahead of the curve here. The UK is not in a recession yet, but I believe it's inevitable that they're headed that way, and that aligns with what I'm seeing on the price chart in the British pound basket. All right, Canadian dollar basket. This one's a little bit tricky. So we've broken out of this support line, traded below it for a couple of days, and we bounced right back up. If tomorrow's not a pretty heavy day, bearish day in the Canadian dollar, then we'll have to reassess this bearish forecast. But as of right now, I'm looking for the Canadian dollar to sell off and test the lows from July 17th. Aussie dollar, look at this, traded right back into this broken support level. It's working as resistance. We got a nice bearish candle today, and I'm just looking for lower to the 61.8% retracement level, which comes in right around 70.50. And finally, the New Zealand dollar, similar to the Aussie, traded a little bit higher, couldn't even get to prior resistance before selling off. The only problem or tricky thing with the Kiwi is that we're heading into pretty heavy support down here. I mean, this was a strong base from which the Kiwi launched in 2020 and again in 2022. So long story short, I do believe the New Zealand dollar does have a little bit more downside to go, but don't overstay your welcome on being short this currency. Well, that's it for me, traders. Hope the currency analysis was helpful. And in conclusion, just always play relative strength and weakness. It is by far the best way to put the odds on your side. Always pay attention to proper position sizing, especially during a volatile market. And of course, follow your trading plan at all times. All right, that's it for me, traders. Thank you very much. Look forward to seeing you next week.